Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and let's begin with Bob's Rant, where we're going to talk about the health of the overall market, not so much from a technical perspective, but more from a opinionated position, and that's why I call this Bob's Rant, because you have the mainstream media that's out there, and what they want you to believe is that the economy is getting stronger. The Federal Reserve will continue to raise rates. The stock market is going to continue higher, and that you should be adverse when it comes to gold, precious metals, etc. And I'm here to say the exact opposite. What you're looking at right now is the weekly chart of the 10-year yield. Now, we have had 2 rate hikes in the past several months. Why is that? It's because the markets do not believe for a second that the rate hike path that we're on is going to continue. And in fact, we'll probably see a rate cut before we see another rate hike. And I know that flies in the face of a lot of opinions out there, but this quote-unquote recovery is long in the tooth, and we are way overdue for a recession. Now, the Republican Party was completely unable to roll back big government last week. In fact, I would declare that the Republican Party is probably all but dead, and the reason why I say that is because of the fact that all they can agree upon now is just how big of a centralized government do we need. Their abandonment of the free markets is astonishing, but it's factual now by virtue of the fact that they couldn't pass this healthcare bill, which really didn't repeal 100% of Obamacare. It kept in place a bureaucracy that was not market friendly. So what's the where to from here? I think that these markets are going to continue to trend sideways with a bias to the downside. The hope that we had a change in Washington, that is a fleeting hope, as indicated on the price chart of the 10-year yield. Heck, we broke out the week of February the 27th, and now we have broken back down into this trading range. That is a breakout point failure, an unsustained rally. This is the market sending everybody a signal there's something very, very wrong out there when you have the Federal Reserve raising rates and the 10-year yield can't sustain a breakout. Please, there's something very wrong. Now, when you take a look at the U.S. dollar, it too is telling a story, weekly chart. It is breaking down. But weren't we told that the rate hikes were going to foster a stronger U.S. dollar? That's what we were told. And I've been saying for months now, the Federal Reserve is way behind the curve. It's too little, too late in real terms for their rate hikes to have an impact on rising inflation relative to GDP. So what does this bode well for? Bodes well for commodities and being short of the stock market. And that's exactly what we're doing. Let's talk about the charts that we're watching this coming week. We will be looking at gold. This is a weekly chart of the GLD. We did have a follow-through week last week, as expected. The price of gold closed near the highs of the week. What I'm concerned about, and we're watching because we do have a position in the gold mining names, not the GDX, but we'll be talking about the GDX for those that are risk adverse. The chart of the GDX relative to gold is not the same. There's a divergence. There's been a divergence for several weeks now, and that divergence continues. We closed at the highs of the week for gold. We sold off on the GDX, and I believe the junior miners, they closed negative on the week. Let's bring it up, GDXJ. Yeah, so there's some concern here about the ability of the miners to continue higher. And while they should do well in a market that is pulling back, and I believe that we are going to see this market roll over in the next several weeks, and we are positioned short, it doesn't necessarily mean that the gold mining names will rally immediately. There may be a lag. So we'll be talking more about the miners and gold on the weekend commentary with members. FIZZ, we're currently short of FIZZ, and you may be saying, wow, you're crazy. RSI 92.59, I think you're crazy to be long of it. Unless, of course, you have a trailing stop loss order in, but right now we are looking to build on our short position very, very aggressively as we move in to the new trading week. Members, more on the weekend commentary. New stocks are on our extreme overbought list. Lincoln Educational Services, RSI 90.08. You can see that we had sellers move in on Friday afternoon. They sold it off the highs of the day, but you did have buyers below. So these candlesticks are implying that you have support below, but you also have sellers above as well. So we'll focus on the weekly charts to identify where there is historical resistance, where we would look to get short of the name with the best risk-reward entry point. Another extreme overbought stock is Pulse Biosciences. RSI is at 88.27. This can go higher, folks. You really need to respect these charts. I think that we could see RSI above 90. We've been there before in recent months. So respect the shares. Wait for the markets to send you a signal that you have profit takers moving in, and then we'll look to sell into that profit taking, meaning sell short. Members, more to come on the week ahead commentary. Oversold stocks. Walter Investment Management. I haven't done my research yet on the reason why these shares have gotten beat up, but it did appear on my screen. I'm going to take a deeper look at it. We have RSI at current on a daily chart, 11.93, making it very interesting. We did rally off the lows on Friday, but the price action here also tells us that we have resistance above. So while we're watching it, we're going to go to the weekly and monthly charts to identify historical support, and then drill down to the 2-hour chart and hourly charts to identify any intraday bullish divergences that are setting up, allowing for us to get long of the shares. We're also going to want to check out short interest to identify, do we have a short squeeze to act as a catalyst to help propel the shares higher. Next chart up is RELY, extreme oversold stock, Real Industries. RSI is at 10.80. It can go lower on RSI. I've seen it, especially on stocks that are trading below $5 per share. Judging from the price and volume action on Friday, we're going lower. So we'll watch it, and we'll look to open up a position probably sometime mid to late next week to the long side. Members, more to come on the week ahead commentary, RELY. Next chart up, continuation breakout trade, NM, Navios, Maritime. Let's go to a daily chart. Members, we'll talk about the weekly chart on the week ahead commentary. All right, so we pulled back early March. Now we're rallying back. The real story here is on the weekly chart. And again, I'll go over that with members. But on a daily chart, you can see that we're putting in higher lows on Stokes, higher lows on Ultimate Oscillator. So the chart is setting up nicely for a move higher. The next chart up that we're looking to short is Amazon. We've spoken about this one for a while now, and it's hit stiff resistance on this weekly chart. We have failed on multiple occasions to close above the 850 level. You could see that the RSI putting in lower highs. The volume bars to the upside have been declining dramatically, to be fair. Volume bars have not been high of late, but MACD histogram, lower highs. I think that Amazon is probably going to begin to break down, and I do not think that they are going to benefit, as many believe, by the demise of the big box retailer. There are jobs involved with those big box retailers. Amazon is helping put them out of business. And while their success may not be 100% of the reason why these big box retailers are going out of business, it certainly doesn't help to remove them as the poster child of the reason why. So they may be a victim of their own success in the end, and it's not reflecting right now in the share price, but it didn't in the 1990s with Microsoft until the government came after them. So I think there's a bigger problem that Amazon has going against it in the future. So members, we're going to focus more on Amazon and the price action on a daily chart, and how we plan on shorting the shares. And that's it for Best Stock Charts this week, folks. If you're not currently a member, please sign up for our 14-day free trial offer. Members, we're going to segue now into the week ahead commentary, which is where we review the health of the overall markets. We discuss our strategy for current positions, and then we discuss the best stock charts that I just went over, but in greater detail, talking about strategy and how we plan on profiting from these trades. Let's get to it.